right? And then we look how it sets up, right, in the morning, right? Just because something gaps up, right, doesn't mean we're going to short it. We're looking to, our bias is based on the daily chart, and then trading a setup that's in alignment with that. I don't think so, Baker. I don't think that they're very aggressive. I think the way I've shown you here, it's quite conservative. Right? What would be aggressive would be having a bias that you're just going to short something because it gaps up. Right? That would be aggressive. Right? You don't have any real plan there on how to do it. Here we're putting together a very good plan on how to trade that gap. It definitely going to have an influence, Luke. That said, I mean, you're going to have stocks that are doing their own thing. Sectors that are doing their own thing. Ideally, timing your entry points with reversals in the market is definitely going to increase the odds of that working out. Right. So, yeah, a 30-minute high after the futures have filled their gap with a stock that was consolidating and showing relative strength. That's going to be a terrific play. Looking for that to move higher. All right, a gap up, from a bullish daily setup. Stock shows relative strength as the futures pull back. You want to be all over that. Right. So failed patterns. Right. It says it sets up failed expectations. We've talked about this already, and again, we talked about how patterns are a reflection of what others are thinking, and the fact that most novice traders won't adhere to a stop. It makes looking at these setups very powerful, right? Because those failed patterns and sometimes even failed bars, right? Setting up those failures is what's going to drive prices in the opposite direction, and most of the time it's going to happen pretty quick. Okay. And climactic volume, wide range bars, right? And we covered this. This is what signals the end of a move. Right? Keep you out of failed patterns. Have a plan, right? That prices can move in either direction, right? Plan that into your trades. And you see how we went and analyzed, the cues, and we looked at the daily chart. We looked at the 60-minute chart, and there's a base. We have a plan, based on whatever the market's going to do tomorrow, right? Whichever way it goes, right? We've determined the base, whether it'll be support, whether it'll be resistance. We've determined that there's voids on both sides of it. So we've got opportunities no matter what it does. Reasons patterns fail. Right? Sometimes it's just the doldrums. Right? What looks like a good setup fails just because less trading activity, less traders involved there. Right? Trading against the prevailing trend. Right? Bullish COG in a downtrend, greater potential for it to not work out. Right? Breakouts and breakdowns, right? Happening right at areas of supply and demand, meaning there's no tradable void. Right? Market internals reaching extremes. Right? Markets, been, or say the internals are reaching extreme. The ticks are at 1,000. Right? Prices in the market have been moving up over the course of a half hour or so. Prices push up one more time. Ticks go to an extreme, right? And at that point in time, you're buying a breakout in a stock that should have been running already. Deep retracements, right? Reversal pattern forming after deep retracements. Right? In other words, trading. In other words, another way of saying trading against a higher time frame. What do we do if we get caught in failed patterns? Right? Right? We say don't get emotional about it. Right? The only way to do that. Can you? Let me turn the sound on and off. Can you guys hear me? Yes. All right. All right. D. Baker. Baker's trying to turn his mic on. Can you hear me now? I turned that off. I think you had hit your mic button. That probably stopped you from hearing. If you guys hit the mic button, it asks me if I want to turn it on or not. Okay, let him log out, and then we'll continue. So as I was saying, the first step in reacting unemotionally to what's happening is to recognize that you're feeling emotions of unease, right? That something's happened. Recognizing that will help you view what's going on in an objective way. Of course, you've got to stop, and if you believe in the method and your plan, right, you're going to adhere to that stop. All right. Now, this three bar rule is something that I use that's just basically an alert that says reevaluate what's going on here objectively. Most of the time, right, the setups that we're looking for based on the trend, bar by bar analysis, our internals, and so on, if we're right, the majority of the time after 3 bars, that trade is going to be moving in the direction that we believed it would. No, it's not. It's not the emergency gap rule. Where you're saying the disaster gap. That's more of that's more like you're in a position and it's gapped against you, right? The next day, right? That's the disaster gap rule. This rule just says that after 3 bars, just evaluate what's happening here objectively, right? Is it moving in the direction that you thought? You don't want to get into rationalizing, right? If it's not working and it's not doing what you thought, just look at it objectively and see if you still want to be in that trade, or maybe everything's okay, right? That's all. Charts reflect what others think, right? They tell us what other participants are thinking, right? How they're likely to react. Right? So when we're doing that and we're looking at patterns, right, I want to know. I can see everybody in the room. I can see when you log in and when you log out. We know when we're wrong, right? So we get out, right? And we know when others are wrong, right? Based on our analysis and the concepts that we've been talking about, right? So by observing when others have gotten caught on the wrong side, like we have in the past, we understand the patterns, right? We understand how they feel, right? We understand what they're most likely going to do, and we want to use that to our advantage, right? Because when they get shocked, right, it's going to set up new opportunities, like those money bars, right? Another term that we sometimes use for those money bars are shock bars, right? Because they shock the traders that are in it. They set up the unexpected, right? And so as we go through our analysis, right, we'll do our retracement analysis, our bar by bar analysis, support and resistance analysis, and so on, to formulate our strategies and decide if this is a tradable setup. Here's a failed PBS. These are going to happen at times, right? It was a pullback, rising 20 MA. It's in an area of support here. We've even got a bottoming tail bar right here that took out the prior lows, right? You know, other than, you know, the wide range bar, the potent reversal down here and the topping tail bar, it's still a pivot high up there, but the way it pulled back, it's in an uptrend. You know, again, the bottoming tail bar here, it was an okay setup. All right, so entering on this, and that topping tail bar that formed initially, that was an initial warning sign. Right? That topping tail bar should have never formed. Right? Now, that's not to say you're going to get out of the trade if that happens, but again, you're looking at this objectively. You know, looking how this bar formed. That bar should have closed that close to its high. Right? That tells me that sellers came in as it pushed up near that high. Right? The next bar, right? We don't want to see the low of that bar get taken out. Right? Something's wrong if that happens. After a pullback and a resting period, right, this thing should not take out a prior bar's low right away. Right? It should not form a topping tail, and if it does, the next bar should take out that bar's high. Well, it's not perfect, Coder, but you know, it's here to show you how we would interpret this. And many traders will look at this and say, you know, using ESP, it comes across the scan, there's a PBS, it's a rising 20 MA, so on and so forth. You're going to hit the button, right? So the example here is that you take a trade like this, right? Know when you're wrong. Get out, right? The trade's not working. Well, it is. I'm telling you, it's not an ideal setup trip, right? I don't like pullbacks that begin from a bearish wide range bar. Right? Even the amount of bars here at the low, right? It was hanging out here a bit too long, right? It's not a good setup. But sometimes, for whatever reason, right, we hit the button on things that maybe they're not ideal. And again, we really don't know how all of these setups are going to work. I mean, this meets the criteria of a buy setup, but at this point in the seminar, you know that this isn't an ideal setup. So, and this may have also happened during the doldrums, right? So where you wouldn't have taken it. So there are various things going on here that says it's a questionable setup, but and know when you're wrong, right? You get into a trade and it's not working, right? Don't hesitate, just get out of it. Here is a whippy setup, right? But we get questions all the time, right? For traders that are starting out, or traders that just took TPM1 not too long ago, right? And they see a setup like this and say, well, there's a PBS. Can I take that? Well, no, right? This is a messy chart, right? We're not interested in something like this, right? We just wouldn't take that. Over here, right, we've got an upward shakeout. We're going to look at shakeouts here in a little bit. You know, prices broke higher, and you got a deep retracement all the way back down. Right? It doesn't violate major support. Right? So demand was strong here on the pullback, and it actually held up. Right? So you know, you had a breakout that failed, right? And then it failed to move lower, right, and break support. Right? So you had a failure of a failure there. And I'd point out to you how this went up. Right? Every time it was going up, right, it was getting sold into, where there was tails on the top here, right? But it never broke a prior bar's low. And then right at the top, it closes on its high. Support was here. Support was here. Support was here. Well, it isn't directly to the left. You're right. I mean, but again, this is pointed out from the point of someone taking TPM1 or would be crossing, would be looking at this area as where it should have held. And based on how I've explained this to you, the reaction to that high is right inside of this box that I just put on here. Those overlapping bars right there. But you're right, it is too far to the left, right? It's beyond what's directly to the left. All right, here's a failed PBS. All right, the top on this one, this high, there's nothing wrong with that, the way that pulled back. Right? It's in an area of support, of minor support here. Right? The angle of retracement is a bit steep. Okay? And again, the idea here is that you had the COG, it triggered the PBS, and it's not moving up the way it should have. Well, if it does that, what you're saying, Baker, is that you've gotten a bearish bar like that being ignored. I believe is what you're saying. And you're saying it rallied, and then you get the first reversal bar, which would be a red bar. And you're saying it's a wide range bar. It seems that the stock reverses back in the uptrend. Right? So if it was to do that, that would be positive, because that bearish wide range bar was negated. But again, we had a setup. It was in an uptrend. It was at support. Right? Rising 20 MA. Right? Angle of retracement was a bit steep. Again, maybe it was the doldrums and so on. In any event, 3-bar rule comes into play for you to reevaluate what's happening. Hold on, guys. I think I can see you're typing there. Can you still see the slides? I don't think so. No, the other connection. I'm showing you the slides on a wireless card, a phone card, because you guys couldn't see the pointer the other day. It just disconnected for some reason. Let me pop back in the room there on that other computer. I would no. You know why that? You know why I say that's not climactic? You can look at it in your manual. But look at the 200 MA. That was the first advance out of a consolidation. The 200 MA was flat. It hadn't even started moving up yet. So even though we cannot see the whole advance and what's to the left on this, just looking at the relationship of the 20 and the 200 and the slope of the 200, I know that that wasn't climactic. I'm having a little trouble bringing the browser back up. Give me a second here. Okay, we're back. Okay. All right, so when we talk about failed patterns, right, we are also viewing this through a failed bar, right? So it says bearish bars against the trend here. A single bar or a couple of bars giving a message that prices are going to move against the prevailing trend that gets negated can give us a setup. Right? So in this case, we had a sharp move up out of the base, right? And then this pullback where this wide range bearish bar formed, suggesting that prices were going to move down, right? And then you had a gap up the next day, right? That sets up the move higher or a resumption of the trend. Right? This gapped up, right? About 50% of that bearish candle. Right? This is how you would, going back to the gap section, right? Stock's in an uptrend, right? It's pulled back, right? We look inside this bearish wide range bar, right? The ideal scenario, it was basing at the end of the day. It dropped in the morning and it was basing at the end of the day, and it gaps up above the base, right? You see the little tail there? Maybe the tail was a pullback into the base and you got a buy setup, right? Right? We can't tell, of course, but just throwing out, the thinking there. However, could have been a 30-minute high, whatever it was. Right? The idea is the daily is up, right? Even though it's a bearish bar, which sets up, expectations for lower prices, the gap up catches some traders off, right? Someone may be looking for a gap down the next day based on the bearish close, and it doesn't happen. Then you look inside the bar, see how it's set up, right? Formulate your strategy. And bearish bar against the trend again. Right? Big, ugly red bar. And we give the benefit of the doubt to the trend. Right? Several days later, we see it's not following through. Several bars, we can't see what time frame this is. Right? It doesn't follow through. Well, here's another red bar, no follow through. Here's a bar that closes on its high. And we say that this is demand building up. Right? Look for higher prices. And will it last a little while longer, Trip? Because I got quite a bunch of slides yet in this section. If not, yeah. All right. If it looks like it's going to go down, you let me know, and we'll stop for a couple of minutes. I'd like to get through this section. Once we get through this section, we're going to take a little break. And again, we're looking at bearish bars here against an uptrend. And here was a failed breakdown. This bottoming tail bar was a red bar prior to completion. But after prices break out and we see a bearish bar, we're waiting to see if that bearish bar fails. Right? So this 100% retracement of the prior bar is bullish, and that's what signals a continuation of that move higher. This slide here gives you the definition of shakeouts and breakout bar failures that we're going to look at on the next slides. And so here, you can review it as you bring up charts on your own. Here's the definition of what we're looking at: consolidations, right? Breakouts or breakdowns, and a reversal back into the base, and looking for a movement after the retracement. Breakout bar failures. These are small patterns. They're subtle patterns that also set up the unexpected here. And let's take a look at some of those. Of course, Coder. Of course. I mean, that's, as we're going through this, right, it is, so you can formulate other strategies, right, for swing trades. Again, we're going to do the same thing, look for the existing trend, right? Look for, failed bars against that trend. No, it doesn't make a difference if the bottom tail is red or green. Yeah, what we're focused on is the fact that the body is up in the upper part of the range. I don't care if it's red or green. The fact that it is a bottoming tail bar. It took out the prior bar's low, right, and it rallied back up to the high of the range. Exactly. Same for the topping tail. It doesn't matter. Here's our shakeout. Right? You have a sharp drop. It goes sideways, right? Kind of like your end of day base, late day breakdown. Could be a daily chart, of course. It doesn't matter. The concept is the same, right? What this is signaling is that it cannot rally after such a drop. You've got topping tails. And then when it does continue to drop, right, buyers step up and the retracement is 100% or near 100% right back up into the base. And when it starts basing there, right, when you get the base, it goes sideways and it begins to absorb the supply that's to the left, right? So rather than pull down to the downside again and roll over, it goes sideways. Right? So while it's in an area of resistance and it attempts to go down, it doesn't. Right? The pattern is one in which it's signaling to us that buyers are stepping up. Right? It was a failed breakdown which removes supply, right? Because traders continue to sell, right? Sell longs on the breakdown, right? And then those that are shorting, right? And when they cover, that is going to increase the demand. That's what happened in the Qs. We had a shakeout pattern, right? And right now, unless this breaks to the downside tomorrow and goes back down to the lows, right? We're going to view this as a shakeout pattern because it dropped and broke to a new low, and the retracement off of the low retraced 100% back up into the base, and overall it's going sideways. You would buy it above the consolidation, right? So just like we were looking at the 30-minute breakout, Dwight, in the gap section, right? Once this came up over here, right? This became initial resistance. So when this came back up to it and went sideways here, you can buy it as it breaks out above the high. So let me just let's hold on here. Do this. Just going to make a little stick figure here of something that I think will clear up this concept. This is what we don't want. Right? This is how we don't want to enter, right? Above on a breakout, okay? Because it came from the low. It came from the low, right? And it retraced 100% to take that out. What we want is this. something like this anyway. There you go. Something like that, where when it gets up to the resistance area, it goes sideways up there for a little bit and then pushes higher, right? Which is what happened here, right? It pushed up into it, right? It consolidated a little bit, and then it pushed higher. So that's what we're looking for with a breakout. Right? I want it to get up to resistance, and I want it to hang up there for a while, and then push up through the resistance. Exactly right. It's the whole time it's just saying strength, and any time prices come up to an area of resistance and it goes sideways, right? It's indicating strength. That's what it's communicating. That demand is staying strong, right? When we covered support and resistance, we said there are going to be sellers and offers at resistance, and that's going to be the case no matter what, right? Uptrend, downtrend, sideways trend, whatever. There are offers at resistance. Okay? If that supply cannot push prices lower, demand is stronger than that supply is. Upward shakeout, right? This increases supply. Right? The trend was down. Prices pushed up above the high of the day, and then they retraced right back into the base and began to go sideways. So here we see supply building up. Those that went long here, right, based on this consolidation, looking for, even a partial filling of the gap, right, they got caught. That's why it says bullish expectations increase here, and then it fails, and prices went sideways. Okay. Now we looked at bottoming tails that set up continuations to the upside. Here's a topping tail that takes out the prior bar's high. Right. And then signal a continuation to the downside. This is a breakout bar failure up at the high here. It's a subtle pattern, and it's one that says, look, get out of your longs. This isn't what it's supposed to do. The stock is moving up, and when sideways, what is the red bar? This one is just an inside bar, if that's what you mean, that red bar right there. I'm not sure where you mean, Trip. Here? Up. This here, this support and resist, these lines here. Over here. This red bar breaking down. Okay, well that is the bar that this red line is a breakout, right? These two little equal highs here. That's what sets up the breakout bar failure, right? So strong stocks rest like that, for a couple of bars. and then prices pushed up through it, right? They're supposed to keep going, right? So if you get a breakout of a couple of bars like this, right? Let's just say you're long, right? You're long on the breakout over here, right? Here's an example of what I was showing you, what I drew the stick figure, right? Here's a base, and prices rested, right, prior to the breakout. You got a bar here. The green bar took out the red bar's low, and it rallied back up again. All right, so you got the correction. Right, that's what sets up the breakout. Now, it rested here, and then it broke out above those highs. Right. You got a minor topping tail, which is okay. You got an inside bar. It broke the low of the inside bar with the green bar here. This is where you would enter the shakeout, right over here, when prices broke out over here. You would enter above the high of this green bar as it started to break out. Right. Over here is where you'd get out of that long, right? Because when this broke out and then you got the inside bar, that's a warning, right? If it breaks the low of the inside bar, that's a warning that this trade isn't doing what it's supposed to do, right? You don't short that, right? But the confirmation of this is if it breaks the low of this breakout bar, that's a bad sign. Right? If it breaks the low of that breakout bar, that breakout has failed. Right? But the inside bar gives you a heads up that this happens, right, quite regularly. If it breaks that low of that inside bar, it's going to bring in some selling. The idea here, or the lesson on this slide about this drop, and looking at drops like this, is what frustrated me to come up with this idea of, what is directly to the left as being most relevant, and if prices have traded above and below. And so I would look at a base like this and say, well, here's a significant area of support. Right? So how could prices drop the way they did? But you see that happen a lot. Well, first thing what causes prices to drop like this is the fact that you got the failure. Right? So that brings in supply. But the fact that prices traded below this base and then through it, well, the only support is this area right here where there's got this congestion where prices might stall. Right? And then you got a pivot low here. But the rest of this stuff over here, right, doesn't mean anything anymore. Right, it's signaling a short-term end of the move. Right, prices stalled for a couple of bars, and there was resistance here. Right, once it rested like that and broke out, it should have kept going. Stocks that have that kind of strong momentum, they're just going to keep going. Right? Bill, the angle that this moved up, it's supposed to be steep. Right? It doesn't mean it's not sustainable. It's supposed to be steep because there was strong buying out of that base. So it should keep going. And the fact that it failed with this pattern, that strong buying, when people see it starting to fail like that, they just start hitting the bid because the momentum was strong enough that this should not have happened. Well, of course, this one here breaks down below these bars and goes right down to the bottom of this breakout bar that's marked with a minor topping tail. So it was quite clear that this was in trouble at that point. But this isn't to say that they're all going to form this way. Right? The idea is The idea is that when you get this consolidation and it breaks out and you got a little tail on the top and you get an inside bar, you want to start being skeptical about this continuing to move higher. So here's the opposite, a breakdown or breakout bar failure to the downside, or a bearish breakout bar failure. Consolidation, right? Here's a topping tail bar, right? It takes out, the topping tail bar takes out the prior bar's high, right? And then when it takes out the low, it breaks to the downside. Right? See, the beginning of your skepticism is the fact that after the rest and the continuation, you're getting a minor tail. You're not supposed to. It's supposed to close down near the low. And then it's supposed to drop again. It should keep going because the rest, right, is building up, you know, a new area of supply, and it should just keep dropping, right? So again, the inside bar here is like, all right, this better drop on the next bar, and if it doesn't, and it takes out that inside bar, right, it's setting up a failure. Right? Now here, your retracement was 100%, right? So it took out major resistance. You start thinking from the long side. Okay. Back to it, retracement analysis, right? Support and resistance analysis, right? It's okay now to buy the first pullback after taking out major resistance. Because a wide range bar trip is like a gap, right? When they drop like this, there's such momentum. If you look inside of a bar like that, it's just a whole bunch of bars dropping. Right? It's a momentum move. Right? There's no congestion inside. This is a collapse. It's similar to looking at a gap down. Yeah, everybody's selling. Everybody's dumping it. Right? You got a big move, you know, in one bar. The demand is to get rid of it. Well, the demand that comes in is pushing higher. You know, the breakdown failure over here, the breakdown bar failure, that's going to create demand. All right, because short sellers are now going to buy to cover. All right, the rally back up is going to start making traders think from the long side. All right, so all of that, you know, demand starts coming in, right, and there's little to no supply overhead because of the collapse. Right, it collapsed. Right, so when prices collapse like that, it creates a price void. Remember, voids are created through price and time. Right, so the drop creates the void, and then time increases the size of the void. Right, right, there's our angle. Right, there's our void. Now, up at the top here comes up into resistance. Right? It might be another breakout bar failure over here. Right? It hasn't broken yet, and that's why there's the question mark. Right? 200 MA, you have to be able to, you know, recognize when moving averages are going to be less relevant as a reference point. There was nothing to the left of this. Right? Momentum stall there. I can see that in the little candle body. Right? But there was nothing to the left of that 200 MA. And this kind of price movement and seeing how prices push through moving averages like this years ago is why at one point I removed them all. Right? Because I would look at something like that and say, well, how can prices go up? I can't take this trade over here. The 200 MA is there, and you see it shoot up like that. It's like there's got to be more to it, right? How can that be resistance if prices can slice through it like that? Exactly right, Coder. Right? Start thinking about tightening up your stops. So bearish bars being ignored within a consolidation here. All right, we're looking for prices to move higher. Right? I'd love to hear that. Prices, right? Bullish price action. Prices move up. Right? So let's assume we're long here. Prices went sideways here. They break out above the consolidation, topping tail bar, inside bar. Right? You are thinking you better start tightening up the stops. Okay? Gap down shock pattern. Right? I think I remember this was a daily chart. Right? So breakout bar failure. Right? A pattern like this with a gap down under that, kind of like a mortgage play. Go back to the gap section. Right? Look at how it formed intraday. Formulate your strategy. Is there a void? See if there's a short setup. Yeah. That's exactly right. Good. There's sellers ahead there. Right. Failed breakdown with a price void above, right at the 200 period moving average. Right. 200 MA is going to bring in sellers. Right. There was a void above. Right. Moving average is just that. Doesn't mean that there's resistance there. Right. 3 bars later. Right. 3-bar rule. Right. It's going sideways. Right. This bar closes up near its high. The message is it's going to go up. All right, measured moves. These set up in 2 ways, and the text of this is on your next slide. It either sets up at a subjective area of support. In this case, support, we're using the 50 MA as being a subjective reference point. There's going to be a void below. Right? The reference point brings in buyers, right? And then that fails. Right? It started with a wide range bar. Right? Pulls back to the MA, forms a COG, it fails, you get a measured move to the downside. They either form from wide range bars or bases. Right? The second way it sets up is a deep retracement up into the actual resistance area. Right? That resistance, you get the bearish COG, and it's almost immediately reversed on the next first or second bar, and that starts a continuation move up. Right? Now these moves up, you'll see, are just equal in distance. Right? That's what we're seeing here. This gives you a guide, right? When you're getting an equal move that of the first move. As I said, this just explains what I just said, and how they're looking for these to set up, either beginning from a wide range bar or a base. Right? You get your setup that fails, and then you get your measured move. Here's one out of a base, sharp move up into resistance out of a base. Right? We look for a little minor correction. Right? We're not looking for a PBS. We're just looking for a 1 or 2 bar correction and then a reversal, and that's enough to get us on board. Right? And then look for the measured move. No. You see these a lot coming out of gaps. I never looked at it, Luke, to really be able to say. Possibly so, but I haven't studied it enough to say it happens out of gaps. But I could see that as being a possibility. Yeah, what we're focused on here, is the initial strength of the move and then the very minor correction. in that last case, it could have been. I don't know if we could have reacted that quickly to it, but definitely above the high of the green bar. All right, this one you get the void, right, and you know, your sharp drop, right, wide range bar igniting the move higher, right. The subjective reference point is the 20 MA, right. You get your minor correction, and then your reversal and your entry would be above the high of the green bar here, and we look for the move up into that congestion to the left. Right, this here, the angle of retracement here is bullish. This is, you know, like your bull flag. Right? And just a bullish angle of retracement there. Here's one of our little money bars. Right, breaking that low and closing up near its high. Here's your breakout bar failure right here. And a retest of that, right, is what forms the M top. This is how prices retrace at an area of resistance when demand is strong. Money bars are correction bars, Gene, in alignment with the trend, meaning I want to see it break below one or more bars lows, right, and then rally right back up in the direction of the trend. I remember where I saw one. There was a good one the other day. I'm going to give you an example here. You enter if on longs above the high, and for shorts, you know, below the low of the money bar. So those are bars that catch traders on the wrong side, either stopping them out, or if they're trading against the trend, right? Where, you know, it takes out a little support for on the longs and little, you know, the highs, you know, for shorts. Right? So the strength of the move is down. It attempts to pop up, and it fails. All right. Our next slide, we got a lot going on here. You had a measured move here in this stock as it moved up to the 200 MA. And greater than 100% retracement. You got your reaction there at the 200, and it immediately reversed back up again. Now this stock, right, was showing excellent relative strength. Not only at the low here, and that's why I have this arrow pointed like this. It attempted to drop, and it failed, right? And it then took out that pivot high. Look at the angle here that this is correcting at the 20 MA. those 3 bars up off of the low create a void. Right? There's some resistance to the left here. Right? Yeah, it's real shallow. Right? This is the kind of angle that's really bullish. Right? That's a bullish angle that this is correcting at there. Right? And then it pushed higher above that area. Right? Now notice the futures were making lower lows as that stock was making a higher low and then began to push up. When the stock reached its 200 MA and began to correct, the futures were consolidating, right at resistance there. Right? And then there was a void above for them to run. Right? So they stalled, right? And then consolidated, right? And then pushed higher up into the 200, which was in alignment with that prior high. Right? So just because you got a moving average there, right, that doesn't mean the stock's going to go down or it can't go through it. Right? So look at relative strength. Right? Look at the way it moved up. Right? We see that the red bar is failing. Right? You got a bottoming tail there. Right? Look for it to go higher. And measured move. Right? Don't trade against this kind of a move down. Right? You might think it's climactic. You see a COG. Let somebody else give it a shot. Right? And here is a short move down, topping tail. That's your level 1 pivot high. Right? Go ahead and short that. You're making sure that it's got room to drop, that there's a void. Right? You're just going to put your stop. Put your stop above the topping tail bar. Right? It should continue to drop. Chart patterns tell us what others are thinking. Right? That's what we do. We are pattern traders. Right? We're looking for patterns to set up, direct us our thinking. Right? If it doesn't work out, we get out. Right? We cut our losses. But what we're really focused on here are those fail bars and fail patterns for us to take advantage of traders that don't understand what's going on. Okay? And have some basic knowledge of candles, have very little knowledge of trends. They get caught on the wrong side, and that is what is driving prices rapidly in the direction of the trend. That's primarily what we're looking for. Right? And when we see the failures, like the breakout bar failures, that just tells us to get out of the way. This trade isn't working, and then we reevaluate. Right? And as it says, we need the confirmation tradable void between supply and demand. Right? We want to stay out of that losing crowd. Right? Recognize if things aren't working, to get out of it. And of course, we're really focused on taking advantage of others to take their money. Right? It's happened to us in the past. Right? You don't have to feel bad about it. Right? The game is to take someone else's money. Right? And recognizing these pattern failures and recognizing the trends and the bar by bar analysis and so on is going to enable us to do that. Right? All right, it's 3:15. Let's take 10 minutes or so, and we'll continue with multiple time frames.